Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello MJ friends, big day out there for the bulls. We're going to check in on a whole bunch of names: CGC, APHA, ACB, Kronk, TLRY, NTGOD, HEXO, IIPR, GTII, KSHB, MMEN. So a lot of you were commenting that I was giddy after hours yesterday watching CGC and assuming it was because I was making money, but that's not true because I just like charts. But I've always been real with you guys, so I sold CGC yesterday on the loss of the hourly uptrend, and I missed most of this move. I traded it a couple times, and I am in a swing position, but missed the chunk of this move selling just before the bulls took off. I want to talk a little bit about the anatomy of the coordinated short squeeze that took place here, in my opinion. But first things first, I missed the move, and I didn't really care that much at all. And I want to convey that to you guys. And I know it just sounds like, man, I don't care. But in reality, when you're doing this for a decade and you've taken over 10,000 trades and you do this day in and day out, you miss opportunities. Sometimes you're going to sell right before something big happens. Sometimes you're going to get in right before something big happens. And you have to be able to just completely shake off that move. I could have looked at this and gotten flustered and ruined my day and been bumming the whole day. Man, I sold. I missed this gap up open and all of this upside. Instead, I said, oh, that's a bummer. And I went around my normal game plan and I traded oil and I traded the biotech sector and I traded CGC and I had a day maker. So, Monday, I have more money in my account than I had on Tuesday, which was more in my account than on Monday. I'm just sticking with my game plan, which is consistent daily gains day after day. Yes, I missed a big, week maker. It would have been nice when those come along. It's a nice bump. It would have been a great way to start the year, but I'm not going to sit here and second guess myself because the fact is, a coordinated short attack occurred after hours that I exited on a technical signal before that happened. So just bad timing. And next time I'll probably get in just before good timing. So again, it just happens so many times and you see these things over and over and over again that you just become numb to them. And that's where FOMO and fear completely disappear, ideally, so they don't affect your game plan. So why was this a coordinated short attack and what happened? This news is based off of two things. Number one, and most significantly, Piper initiating coverage and giving a significant uptick. I believe it was a $40 price tick or price target. And they also covered TLRY. Why didn't TLRY run today? TLRY is down 4%. Well, because this was a targeted short squeeze, in my opinion. So that news alone, you're not going to see this kind of major move out of nowhere after the bulls have been struggling to bounce for 2 weeks, in my opinion. We also have Bruce on CNBC after hours at 6 p.m. Eastern today. That's another factor. But again, he's been on many times. They talk about CGC all the time. That's nothing major. So what's happening? Why did we just see the highest volume spike that we've seen in well over a month? In my opinion, it was a coordinated short squeeze. So the move happened after hours, as we saw in the video yesterday. And what that does is, just like bears try to trigger stop levels to shake out bulls, bulls do the exact same thing. And in this scenario, the bull move that occurred after hours caused us to see an open this morning that was a couple percentage points, maybe 3% above where we closed yesterday. So what that does, it also was above key resistances. WEED broke that resistance first thing this morning, and CGC reached the highest point of this bounce. So what that does is it skips the bears' stop levels, and it forces them to scramble to cover, and that doesn't allow, stop levels to be hit. So that's the same thing as, a gap down, skipping stop loss orders for bulls to try and exit positions. We skipped stop losses that would allow bears to cover and protect their shorts. And what we saw was an insane amount of bull pressure in the first hour of trading. And when you see this kind of bull pressure and bull flags, again, it doesn't allow bears to cover. You are forcing bears to cover by market buying at the ask to exit their positions. They can't wait and then exit on consolidation because there's no consolidation there. And the fact that we went with brief consolidation on the initial selling of the gap up open. And as we know, if we see bulls buy the gap up open dip, as we used to see on the run up to all-time highs, we know that we expect profit taking when the gap up open occurs. If the bulls buy that dip in the first 10 minutes, that's significantly showing strength. If we had continued to pull back for 10 minutes, it would be a sell the gap up open kind of morning. So we almost filled the gap back down to the high of yesterday, missed by 20 something cents. But again, the bottom line is tons of bull volume is bulls pouring on the pressure, not allowing the bears to cover, and forcing the bears to buy at the ask. So you have both bulls buying at the ask and bears buying at the ask, and that continued the vast majority of the morning, again, with huge volume coming in here. At a certain point this afternoon, we could say, all right, the volume is massive. This is an extremely strong move. We've seen this script before, and this script is a strong close up at the high of the day, and the bulls are going to look for a gap up open. And the fact that Bruce is on CNBC this evening only adds to the fact for the potential of extra hype, extra momentum, sucker in the last of the herd that missed this move and is going to be buying right before consolidation. But we saw that, and at 2:15, I said I would not put it past the CGC bulls to close high of the day and try and gap up tomorrow on Bruce CNBC. Long way to go. Watching the tightening pattern, that gap would obviously be for selling. And the reason that gap would be for selling if we do get a gap up open tomorrow is because this hourly chart is so extended and we need a healthy hourly higher low. So if we gap up open tomorrow, this hourly is going to be even more extended with the RSI over 80. And again, the last hourly consolidation level we have is 29.96. So I entered into the afternoon into CGC anticipating a gap up open, and I might sell after hours. I have to see what the reaction to Bruce being on CNBC is, but I'm going to be looking to take profit sooner rather than later. So again, I missed out on a massive move. You can see I'm not too beat up about it. I did flip CGC once, and then like I said, I'm currently up about 1% after hours here, and that's fine by me. I'll get them next time. So congrats to all the bulls that have positions, and what this did do for the sector is kicked the tier 1 names, APHA, ACB, Cron, it kicked them up a notch, and finally saw that follow through after playing laggard to all the low cap names for so long. This is now a real bounce. So this is the bears, or excuse me, this is the bulls saying, no, this is not a bear flag, and with the volume behind it. And we're looking at the weekly time frame now. Initially, this bounce was very weak, and we said, we could drop to a lower low. This bounce is that weak. And now this bounce is significant enough that we know the more likely scenario is that we're going to consolidate for a weekly higher low. We're not changing the weekly trend yet. We need the weekly higher low and higher high to do that. But obviously, we're giving the bulls a lot more room to work with to form that higher low. And of course, the increasing bull volume is great as well. Another thing that I love about this action is this is providing great volatility for day trading. CGC is now back on my day trading menu after being off of it for what seems like a really long time, weeks and weeks and weeks at this point. So when you see the kind of moves where you pull back, 3% plus and then see a bounce of 3% plus, that's great for day trading opportunities. So I'm pumped about that. The volume's back, the liquidity's back. Another thing that I'm going to point out, as I do on every video, oil had an extremely bullish day and the S&P 500 was bullish up 0.5%. So this was an ideal day for the CGC bulls to put this short squeeze on. If we had seen a red day in the S&P 500 today, I wouldn't have been surprised to say CGC would have only gone up maybe 7%, 8%, as opposed to 13%. That's just me pulling numbers out of the air, but my point is that it was a beneficial environment that allowed for further upside with both oil and the market bullish that might not have seen that much upside if that were not the case. So with that, again, as I say on all of these videos recently, when the S&P 500 and oil start consolidating, I'm going to be watching very closely how does that correlate with these names. Are these names going to respond and consolidate as well, or are they going to disregard it and continue doing their own thing? CGC at this point, we know when we consolidate from here, we're going to form an hourly higher low. When we lose the hourly uptrend, we're going to form a daily higher low. The bulls have that much space to work with. Look at the exponential moving averages here, the 12 and the 26 period. They've given some nice smooth signals over the last 2 years. And at this point, we've seen one bull cross, which led to the all-time high run, and we're closing in on another bull cross. Every time we've seen a bull cross, we've gotten a decent amount of follow-through, so that would be notable if that is going to be coming here at some point next week. We're going to keep an eye on that. So higher low will be anticipated on the hourly and on the daily, and obviously a very significant shift in momentum and sentiment for the space. The sentiment had already shifted on all these tier 2, tier 3 names that had bounced 30 to 60%, but now it's shifted for the major names as well, which is very important for everybody involved. Resistance for CGC is going to be 35.18. That's the most important resistance level short term on the weekly as well. That was our last little weak bounce attempt. If we can get over 35.18, we break the high of the last multiple 2 months, let's say. So again, weekly trend change has not occurred, but we're positioning ourselves well for the bulls to be able to change that weekly trend. If oil and SPY give us a weekly higher low and higher high, changing their trends, we're going to be looking for the MJ sector to have a really good 2019 if that all plays out. And oil bounce has been massive. I'll go over that in the SPY video, but odds are looking pretty all right for the bulls to pull that off. APHA responding well as well today, breaking its key resistances, high of 912 on the Canadian side of things, and getting over that level is now gap fill if we can get over that level more convincingly. It's a double top, 912, 913. If we break that level, we're looking all the way back up to 1030, trying to erase the memory of that short attack if we can get back to that level from the day before the short attack. But at this point, it's a double top that we have to be watching that's going to be tested tomorrow. And on the hourly time frame, same thing. We're overextended. The last hourly higher low was 828. So just be aware that for all these names, we know that hourly consolidation is coming in the near-term future, and we can anticipate that it's going to form a higher low on the first pullback because we have so much space to work with for the bulls. So clear resistance on APHA to be watching. ACB trying to play catch-up, had a bearish reaction to the adjustment of numbers that we saw yesterday. Did break the high of the bounce, not by much, 722. We got up to 732. So shifting momentum here. It's still the clear laggard out of all the major names in the Canadian MJ space. But we held support of 659, held it by 5 pennies, and the next resistance level after 732 is 753. And there's a lot of shorts on ACB, so bulls want to keep up this pressure and try and force some of those shorts to cover as well. Cron continues chugging along. Higher low on Cron. On the daily time frame, at this point, we've seen a higher low now pretty much every day since the bottom of this consolidation. It varies by a penny or so, but we can call that 10 days in a row of a higher low. So that's a pattern to be watching. When we lose the pattern of a daily higher low every day, we're going to look for healthy consolidation. Still watching for the likelihood of a weekly lower high being set, but these bulls are looking good to potentially form a brief higher low, maybe a cup and handle pattern where we can't break 1395 on the initial attempt. We pull back for brief consolidation, maybe a little weekly bull flag, and then trying for continuation. That's looking, a good ways out. At this point, we'll just look at the daily and take it one day at a time. We still need another 8% or so to get to that resistance. So again, we're pretty overextended, but bulls are looking good on this hour, on this daily consolidation. When we look for a healthy higher low, we're going to look for bulls to buy this dip. And just looking at this chart, out of tier 1 names, Cron is probably the closest to hit all-time highs. 1530, and here we stand maybe 20%, 18% below that resistance level. Let's find out. $17.67%. So we're close to all-time highs on Cron. Again, I don't think it's just going to happen. We have to consolidate, but keep an eye on Cron to hit all-time highs in 2019 if oil and the S&P 500 give us that weekly trend change that we're going to be watching for. TLRY did not get followed through. Well, it actually did, but certainly couldn't hold that follow through. Pushed up to 87.50. Free shares are becoming, or locked up shares are becoming free trading on TLRY in the near future. Be aware of that. The market's going to price that in before it happens, so I don't expect a dump the day that the shares become free trading, but just be aware that this could be, potentially a pump to help the price for when those shares do become free trading. But at this point, we're watching hourly consolidation and pulling back a little bit, obviously not seeing any of the major momentum that the rest of the tier 1 names saw. So at this point, we're watching the range here on this one candlestick, 87.50 and 77.10 is support. We're going to look for a higher low compared to 77.10 and a bounce. Then we'll look for a lower high. So if we can hold 77.10, we'll have an hourly tightening range to be watching. But obviously, the bull momentum is focused on those other names right now. End bulls are still on fire. Increasing bull volume is a great sign. At this point, end's probably one of the leaders in terms of percentage bounces, well over 100% from the low. 100% move in 6 days. So again, we're not going to see that on these names that have hit the spotlight, that have major market caps, and that have major liquidity. We're going to see it on names that are listed on less liquid exchanges, and a little bit of dollar volume goes a long way. At this point, if you are in a position, you want to be asking yourself, should I be scaling out to protect some profit? What are the odds that I'm going to be able to rebuy below 165 at some point in the next month? And the answer is probably likely that that's going to be the case. That being said, if you have long-term positions and your plan is to just hold it, stick to that game plan. But this is a 2 gap up pattern at this point. We're closing at the high of the day, showing bullish momentum. And if we gap up again tomorrow, that's a bearish reversal 3 gap up pattern. It doesn't necessarily mean that we see a bearish day on that 3rd gap up. The 4th day after the 3 gap ups is when you look for the bearish reversal candlestick to confirm that pattern. So I see it many times occur on the 3rd gap up day. We start to pull back, but it doesn't have to conform to that pattern. So congrats to the bulls here. Obviously, the size of the weekly bounce, we will absolutely be looking for a weekly higher low to form once we do begin to consolidate. And weekly trend changes is what we're going to be watching for the entire MJ sector in Q1 2019. Can we get that higher low and higher high to shift this momentum? And like I said, I do believe that what oil and SPY does on their weekly timeframes will be significant. T-God, this is one that's a little bit more developed in terms of its consolidation from the initial bull move and a higher low trying to form. So if looking to enter a bullish position on T-God, or if in a bullish position, I would be looking at 241 as a key stop level, because if 241 breaks, we're heading back down towards that all-time low. This is the higher low on the daily time frame. The bull volume is a good sign, and they need to see a break of 287 to confirm the daily trend change. After 287, we're going to be looking up at 3 psychological and 324 as key resistance levels. So this is one where it's much different than everybody else. And again, as I said in the last video, we have a lot of names that everybody's in different stages of this bounce. Some names like N are still full throttle ahead for the bulls. Some names like T-God have seen significant consolidation to form a higher low. Some names like OGI have seen a little daily bull flag and are trying for continuation. So everybody's at different stages. And again, the most important short-term clue that I want to know is, how do the bulls react to SPY healthy daily consolidation? HEXO, daily inside bar. So this is another one where we see daily higher lows each day. Looked like a bearish reversal candlestick yesterday on the hourly, but we broke the equilibrium bullish. So we had the high of the day, low of the day, lower high, higher low. And we actually did just barely break support this morning by a couple pennies, 5 cents, and didn't get much follow through on that bear break, and bulls held on. So at this point, the most important resistances are 635 with a little double top on the hourly and actually a triple top, 635, 648, and 663. And if we see a bear break of 604, we're going to be looking at a shift in momentum and healthy daily consolidation to start. And again, because of the significance of this bull move, we are going to be looking at bulls buying daily consolidation for those higher lows. IIPR, significant follow through 3 days in a row, but a little bit toppy with the bearish reversal hanging man candlestick potentially forming. The hourly time frame has a tightening range to watch here as well. Base of support down at 50.60. If we cannot break 52.49 and we form an hourly lower high, and then if we break support of 50.60, daily consolidation is underway. And then we're going to look for a daily higher low to form in the upper $49 range. And the weekly time frame for IIPR also pretty healthy, and keeping an eye out for IIPR to hit all-time highs in 2019 as well. The closer we are to all-time highs on an individual name, the better. The easier the bulls can run once we get those all-time highs. That's when the real profits start to pile up quickly. GTII also looked like we were starting consolidation. We had a double bottom down at 1430. Bulls held support 2 days in a row and saw some follow through today. So here's another one where the hourly time frame was tightening up with an equilibrium that broke bullish. High, low, lower high, higher low, bull break on increasing bull volume. Now the bulls must hold 1487 on this hourly consolidation and try and keep the hourly uptrend in their favor. As we know, when we lose the hourly uptrend, we're going to be looking for healthy daily consolidation on the vast majority of these individual names. KSHB, bearish reaction to earnings initially, but look at the dollar volume that's being traded here above $6. The past 2 days, a lot of shares have changed hands above $6 here. The 2 highest volume days that we've seen in many months, and we're looking for the bulls to hang on here. I was impressed by how the bulls bought the dip and how we held on. The hourly didn't lose the uptrend at this point. So I'm looking at support of 606 and 586, and 641 is our key resistance level. And again, we're just going to look, if we lose the hourly uptrend, we're going to look for daily healthy consolidation in the upper $5 range. And KSHB is another name where I'm going to be watching for all-time highs in 2019, as if we clear 693, there is very little resistance back towards that all-time high. Financials weren't fantastic, not a ton of cash on hand. I believe they did mention that they don't have to do a dilution raise anytime in the near future, but again, I can't stress enough, SPY and oil change that weekly trend, and we're going to see continued shift in sentiment in the overall market, and we'll probably see that continued sentiment shift here in the MJ sector as well. MedMen had a bearish reaction to drama with lawsuits and all that. They issued a response at 3 p.m. We got essentially an equilibrium. We did break bullish, but obviously no follow through, so I'm calling that a double top. And now we're pulling back for the daily higher low. So we got the low, high, higher low, double top. We're looking for the higher low. MedMen bulls are potentially looking for an entry. 346 would be a stop level, where if we break 346, we're probably heading back to that low of the pullback, which I guess is the all-time low there at 311. But 346 is the most important short-term level. An hourly trend change would indicate that the daily higher low has been established. So if we change the hourly trend, you could then use the low at that point of this daily pullback as a stop level and look to see if the bulls can head back up and try and break this little double top for a more significant sentiment shift. One more I wanted to look at. IAN, let's check in there. Potentially a laggard play. Has not broken bullish on the daily. Starting to consolidate, closed at the low of the day, but still a daily inside bar. Low, high, higher low, lower high. We're going to look for a pullback and a higher low. IAN is a really nice equilibrium to be watching for the next month or two. MPX, trying for a cup and handle here. Keep an eye on MPX tomorrow. 98 and 97 is a double top. Daily bull flag, close at the high of the day. And with a bull break at 98, MPX is going to be ready to go. 98, 99, $1 psychological, and then 106. But very brief consolidation for that bull flag to try and break 98 and see some continuation. And if we break 98, you want to break $1 on the same day to see that follow through. There's one more, LHS. So LHS is at a key resistance as well. We have the low, high, higher low, currently a double top. If we break 113, there's a lack of resistance nearby. There's a gap to 118. This is another one that we were watching in a tightening channel, tightening range, and testing key resistance. So we have had a major sentiment shift in the MJ space, and obviously it was marked by the S&P 500 hitting the lows, in my opinion. And some names started their bounce before that, but the vast majority of these names, the significant shift, if you compare all their weekly timeframes, it's the last 3 weeks that this move has been going, and that's when SPY hit its bottom, when oil hit its bottom, the sentiment shift was on for the bounce to take place, the market lost its fear, and now we're getting talk about, the Fed responding to the market and potentially easing up the raising of the rates based on the numbers that are coming back. Essentially what the Fed has been saying to me, my interpretation, is that the Fed's not going to raise rates if the market's weak. So that's obviously a bullish sign for the market as a whole. And if we get those weekly higher lows and higher highs, it's going to be a good 2019. Well, we'll say a good first half of 2019. Don't want to look out too far. Appreciate you all watching. Do good things out there. We got some crops here at the end. And just a reminder that you can grow a whole bunch of stuff when it's still cold out. So if the temperatures are 32 Fahrenheit or 0 for Canadians, Celsius, you can still grow stuff even below that as long as it doesn't dip too far below, but cover with some Rime or some plastic, frost over kale, sweetens it up, it causes it to produce sugar, and there's plenty of things that you can still grow right now. So where I'm staying for the next 2 months, they've got a little garden growing, and I'm certainly enjoying hanging out with those plants. And we'll see you tomorrow. Congrats again to the bulls. Have your game plans established. Whether you're trying to get out of red positions, whether you're in green positions, establish those game plans. Last thing you want to be doing, and everybody that experienced the last year of action in Canadian MJ, you're not going to make those mistakes again. And I learned the only reason I didn't make these mistakes in cryptocurrency and Canadian MJ that allowed me to hold on to all those gains was because I made all those mistakes back in 2010, 2013. I learned those lessons. So those of you that have sat through this now, the last year or two, you've learned those lessons, and I promise that you are going to fare much better with coping with your emotions and not thinking we're just going to the moon forever and locking in profit and remaining protective and using stop losses. And that is how you're going to up your game as you continue to clock in hours and put in time at this skill you are honing. My voice hurts.